Welcome to Monday Returns. Absolutely crazy week on the markets last week. Crypto, public markets, private markets, public markets uh, really exploded at the end of last week. Uh, Crypto markets falling apart, bankruptcies, contagion possibly. So it'll be interesting to see how the returns actually shaped up this week. So looking over the last 5 trading days, what has done well, what has not done well overall in the ETF universe. Wisdom Tree, gold miners has done well, cybersecurity, cloud computing, K-pop, ARC innovation, ARC genomic revolution did well. That's interesting because both these Kathy David funds have not done well this year, but with last week's jump in the NASDQ, which contains a lot of the companies within her funds, it makes sense that their funds would have a big jump like that. 7% day in the NASDAQ on Thursday. So I assure you that was a big part of these two funds jumping up. Um, but as you can see, technology based for the most part, with what did well last week, kind of what didn't do well. Crypto industry, as you might imagine, First Row Skybridge crypto industry, they had actual investments in FTX, if I have my information correct. So they may have more coming into the future of on the downside. Jumping over to kind of the different sectors, this is kind of the overall universe of the ETFs. But I'd jump by sector to kind of give you an idea how other areas of the ETF universe moved. This is fixed income. As you can see, obviously you're not going to have the upside in a fixed income fund, but different ones. Gold hedged did well last week. Zero coupon bonds, preferreds did well last week. That's been an interesting one that, as an advisor, I've been getting lots of investment companies saying, "Hey, do you want to be in preferreds? Do you want to move into preferreds?" The reason being is they definitely have some yields attached to them. At this point, I think you can get yields in less volatile areas, but we'll see how that goes. On the downside, simplified tail risk strategy. This is an interesting one because this is one that's done really, really well. Strategy based on interest rates rising or hedging the interest rates. So that is done really well. Obviously, last week was a bad week. Moving on to the commodity space. Again, nickel did really well last week. This is also an interesting one from Invesco, electric vehicle metal commodity strategy. All those EVs that are coming down the pipe from every automobile automaker is going to have those metals to build those cars. So this is one that I'm actually very interested in to see how that space does moving forward. But all the different deals, typically when materials are doing well, that tells you economy is looking in good shape. Continued building is part of that. On the downside in the commodities, oil was a little bit of a down. Natural gas was a down as well. So that makes sense that the funds that follow those are also down. Moving on to currencies, as you can see, there's not a ton of currencies. Dollar index still strong, still moving strong. Blockchain, Bitcoin, as you might in crypto, down big on the weeks. Moving on to alternatives, and this is where you can get very unique funds within the alternative space. Pretty good returns in China real estate, apparently 23% last week. Breakwave dry bulk shipping, this is one that pops up on the overall, is really huge weeks and down weeks. So interesting to see it just has a normal big week. And then again, in another space, Bitcoin strategy, big on the downside, negative 23%. Down to mixed, this can be a mix of different types of ETFs. A lot of high yield, but there can be all kinds of different things in here. A lot of allocation type funds, some decent returns over the last week. And on the downside, there wasn't a whole lot of downside returns within that space. And then lastly, is the leverage space. Now, this is where your returns and declines can get crazy, even in 1 week times. So this is a semiconductor 3 times bull. Last week was the week to be in this. As you get the NASDAQ jumping 7% on a day, you're going to take advantage. A big part of that was the semiconductor space that jumped up. On the downside, you're going to get the exact same thing. whatever it is, it's going to be 3 times worse. So real estate, biotech, what did worse was anything that was semiconductor on the bear side. So you're betting against semiconductors doing well ×3. So as you might have said, that led the pack, and the exact same fund to the opposite side was the worst. So just kind of a interesting thing with leverage is, you can really dial up or dial yourself into trouble for returns, trying to get greedy, time of when a certain sector is going to do really well. So anyway, from a return standpoint, overall the week was a good week in the markets. Definitely anything that was crypto related or Bitcoin related or really anything crypto related got beat up pretty good. But that sector is always highly volatile, so that doesn't necessarily surprise me, even with what was going on with FTX. I also wanted to jump over quickly over to ThinkPipes and kind of give you an idea what the S&P 500 is done. So this is the last 20 trading days. You can see it's been from 3,600 to 4,000 today. From a momentum standpoint, it keeps rising and falling. After it fell, we had that huge momentum string from last week, and then that just built on from Thursday to Friday. As you can see, the momentum just went through the roof. So it wouldn't surprise me if there was some more downs this week. Actually kind of surprised that the market has held like it's held so far today. Basically flat after a big run up on that. A lot of times you'll see those gains given back. So that's still a possibility over this week, and as the markets have been moving on really any type of bad news, investors have taken up money off the table very quickly during this last 6 months for sure. So hope that was helpful. I hope you all have a great week, and we will see you on Friday. Have a great day.